Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today, we're going to be talking about Ripple and XRP, as well as the vast majority of crypto and also even finance. So, you want to start with Custodia Bank. I know that this is probably, something that you've heard about quite some time. There's probably been 10, 20, 50, who knows how many videos out there already talking about this subject. I just wanted to give my quick little insight on this. So, first off, let me give you guys the full rundown. So, Custodia Bank, they wanted to become a crypto-focused bank. They want to hold $1.08 per depositor who deposits money into the bank. This would essentially back all of the depositors, and they didn't want to be FDIC backed, which I don't blame them. Listen, we've been talking about the FDIC. There's no liquidity. They don't have enough reserves to back all of the banks, which again, you'd think that they would learn from 2008, but they don't. But anyways, they completely shut out Custodia Bank from becoming a bank, and they even do mention a few things down here around the rationale for it. They talk about how with crypto it could basically become volatile, which we always hear. We also see them talking about, how their their revenue model basically relies most solely upon the existence of an active and vibrant market for crypto assets, makes it again vulnerable to market volatility. Um, but they did say that Custodia appears to have sufficient capital and resources to sustain initial operations. So it's pretty interesting. And then also they said that the current record indicates Custodia could in fact pose a significant risk to its community. It's pretty comical that we're seeing this response from the Fed with what we recently just seen. Also, more so on this, like with Custodia, I don't have a full on opinion on this, but I will say this. They even did talk about it. They talked about, how, instead of choosing to work with a bank utilizing a low risk, fully reserved business model, the Fed instead demonstrated its short sightedness and an inability to adapt to changing markets. Perhaps more attention to areas of real risk would have prevented the bank closures that Custodia was created to avoid. It is a shame that Custodia must turn to the courts to vindicate its rights and compel the Fed to comply with the law. Like, yeah, I mean, listen, if they wanna completely ignore solvent banks, fully solvent banks, by the way, then that's fine. Actually, do you see up here, like historic bank runs in the last 2 weeks underscore the dire need for fully solvent banks that are equipped to serve fast changing industries in an era of rapidly improving technology. The thing is that they don't see a future where crypto's thriving. That's the problem, right? They still see a future completely dominated by central banks and reserve banks and the big bankers making a ton of money off of us. Like that's what they see. They don't see innovation. They don't see change. They don't see any of that. Um, and I think that the clear intent there was, with the recent bank collapses, where if they were going to get bailed out and bought, that they would need to drop all crypto-related activities. Like that's just ridiculous. And in fact, it's childish and immature. Um, but this is the problem with the banking world, right? We have everything fully over leveraged. We know that traditional banks are basically dying. We know that the traditional banking world is completely flawed. It's broken as well. Everything's over leveraged. We see banks playing with customer funds. There's no difference between for an example, like FTX and the big banks. And I know that that's a fully exaggerated example, but it's one that's extremely accurate, right? You had FTX utilizing individuals' funds for, trading and leverage trading and things like that. But you also have these banks that are leveraging your funds to, like for an example, local banks, I know for a fact, take in depositors and then they also invest around the local area in certain businesses. And they give out these loans and, they earn on them, sure. But, it's the idea that like the end of the day, they're just leveraging what they have in terms of deposits, and they rely on the FDIC, for an example, to back them. Because if anything, fails, guess what? They could just turn to the FDIC, who then turns to the Fed, and then the Fed, prints more money, and it's just a constant revolving door of debt. And we have not, like, nobody sees a problem with this, apparently. 30 plus trillion dollars in debt, like, what is going on in the world of finance? What's going on in the world of, economics? And then over here, We did see from Pomp Podcast, everybody has their own opinion on Anthony Pompliano, but this is Caitlin Long. She's talking about, bank regulators crushing innovating banks. That should scare every American. They want to retrograde technology back to the analog world. Listen closely to this video.
So here's the punchline. The systems have not been updated, and that scares the bank regulators. So what did they systematically do? They went out and proverbially shot the most tech-forward banks. Now, stop and think about that. People are voting with their feet to use better, faster, cheaper ways of moving money. And what did the bank regulators just do? Shut down some of the most tech-forward banks in the country who can move money better, faster, and cheaper. That should scare every American because, and you saw it in the White House. By the way, this has been all coordinated. The White House report that came out the day before was dunking on financial innovation and talking about how we should basically just stick with our banks, which are safe and sound. That was a hilarious observation because, of course, we all know the banks are not safe and sound. It's now very clear that there is a solvency hole. By the way, there always has been. It's just that now everybody's realizing it. So the next point is that when the White House is out there saying, basically taking an anti-innovation stance, and you see what the bank regulators have done to shut down some of the most tech-forward banks, they want to retrograde technology back to the analog world.
And I do agree with her. Like, listen, in the last couple of years, and I mean going all the way back to the SEC lawsuit against Ripple, I think that this should terrify you. I think that this should also show you the lengths at which the government will go to secure the monopoly world that they built, basically, right? Like, we are protecting bankers right now in the US. That's all we're doing. We're protecting this monopoly system that they continue to eat off of. And it's all centered on greed and control. I mean, it's sickening. It truly is sickening when you actually take a look at, the reasoning behind what's actually happening. They don't care about investor protection. They don't care about any of that. They care about the control aspect. They care about the money aspect, right? And it's always been that way. You look at the national average on earning APY at a bank. You look at the average on earning APY in DeFi, and I've talked about this so many times, but it's the truth, right? Like, you see it, dominance taken away from the traditional suits. They don't like that. They don't like that one bit. Now let's take a look at the current economy. Let's take a look at fiat currency. So this is posted from Robert Breedlove over on Twitter, and actually quoting the creature from Jekyll Island. And it says the hard truth about fiat currency from the author of one of the most important books ever written. Listen closely to this video. I know that the audio is going to be a little bit rough, so just full transparency for you guys out there. But nonetheless, listen closely.
The government is able to borrow a tremendous amount of money and therefore spend more than it takes in taxes through this process. But never enough. They always need more than that. Not to worry, they say. They walk further down the street to the Federal Reserve building. Now the Fed has been waiting for them. That's one of the reasons it was created. They walk in there and the Federal Reserve officer opens up his desk drawer, pulls out a big checkbook, and he writes a check to the United States Treasury for $1 billion and hands it to them. Now we need to stop and ask a question. Where did they get that money? That $1 billion, that's a lot of money. Who put the money into that account for the Federal Reserve so they could give it to Congress or to the Treasury? And the answer is, there is no money there. There's absolutely zero. There's just a checkbook. Well, if you and I were to do that, we would go to jail. But they can do it because Congress wants them to do it. This, in fact, is the payoff. This is the benefit to the government for being in the partnership. The government can go to the Federal Reserve and obtain instant amounts of any amount of money they want without having to confront the taxpayer and say, we're going to raise your taxes for this money directly. It would be very unpopular if Congress had to go to the public and say, we have a lot of money we want to take from you folks, and it's going to cost you $3,000 per family more than it did last year. You know how long they'd last in office. So they like this mandrake mechanism very well. The public doesn't know that it's costing them anything. It's just how it works somehow.
So yeah, I mean, this is exactly what is wrong with our current economy. And we continue to see these big regulators and we see all these, big names around the Fed constantly pushing this complete nonsense picture around how crypto is so risky. Crypto is this, crypto is that. What about the traditional banking system, like the banking world, right? And the banking system? It's all flawed. It's broken. It's completely garbage, in fact, right? But they don't want innovation. They don't want innovation at all because, like I said, and the money tied to it. They want to get rid of that. They like the idea of constantly printing money to, back their nonsense agenda and then charging you and me, the taxpayer, more money at the end of the year. Even though, even this year, for an example, anybody that's paying taxes, I'm sure that's rough because guess what? The cost of living is skyrocketing due to their actions. But no, that can't be questioned. And we actually did see Kim.com post a full-on thread, and he was actually utilizing tweets from 2018, 2019, and so on. And he's just talking about the biggest economic crash in history is arriving, and I take no pleasure in saying I told you so. It was inevitable. It's going to get really bad. Read some of my past warnings. Now, I've talked about this. I do think that a 2008-like scenario, much larger, going to be on a major scale beyond it, is going to happen. Because first off, our economy is running on nonsense. It's running on absolute nonsense, and guess what? It's out of gas. There's no liquidity. It's gone. Okay, and it's inevitable. We will see another crash, and it definitely is gonna like something is gonna break. And I want you all to understand that we don't look for things like this. We don't want things like this. But they happen when things are not managed correctly. What do you see down here? I think you should get out of the banking system now. Shift your deposits into gold, silver, or crypto. You can't trust your bank or the government. When the derivatives bubble pops, no government will be able to print enough money to guarantee all deposits without causing hyperinflation. And that's exactly it, right? Hyperinflation is on its way, whether people like it or not. I personally love his three here, the gold, silver, and crypto. I think that all three are great. I think everybody should diversify into all three as well. But right now in the world of the economy and finance, everyone, it's so clear what's happening. It's so clear what's coming as well. And for those that can truly see it, and I mean truly see it and understand what's happening and what's coming, I want you all to understand that you are ahead of the curve because most people don't realize what's happening. I mean, you look at total deposits, they're down 3.5% from its highs, or more than $650 billion from the peak. This is the largest drawback in deposits in the last 2 decades, surpassing the GFC levels. Look at this. Look at commercial bank deposits in 2008 compared to where we are at now. Yeah, this is a big problem. I'm telling you, history rhymes, it doesn't repeat. 2008, guess what? Phone's ringing. 2008's calling, and the Fed is soon going to pick up. And it's not going to look pretty. Not going to be pretty. Unless, you're one of those individuals that are prepared for it, that has been preparing for it, that understands what's happening. Because we still have a ton of individuals out there jumping into debt, taking on car payments, buying inflated home prices. I mean, right now we see a lot of individuals living well beyond their means. We see a lot of individuals spending beyond their means, and they're not investing. They're not buying physical, cash. And when I say physical cash, I mean more so physical gold and silver, right? Which, by the way, don't invest into digital gold and silver. Make sure that you are getting physical gold and silver. But right now, the world is a messed up place financially. And those that are seeing this, seeing everything happening in real time, I want you guys to understand that, guess what? This, things are changing. Things are fully changing. I mean, we see over here, the U.S. banking system is stable and sound. No, we're not. It's absolutely not. Like, look at the borrowings, right? Small domestically chartered commercial banks. This is the problem right now. This is the biggest problem that we have right now. Look at 2008 compared to where we are at. Like, I'm telling you, you do not need to be a rocket scientist to see what's coming. This is going to be the largest financial collapse in history. And what comes from this? Well, most likely, guess what? Rebuilding of the system in real time. Not 2008. This is 2023. Reminder, since 2010, central banks around the world have been net buyers of gold. Yeah, a new economy is coming. It's happening, and I'm telling you right now, I guarantee you, I don't say that word lightly on this channel at all. I guarantee you that their response to a collapse, CBDCs. CBDCs. Because guess what? It's the easiest way for them to say, "Hey, look it, we're adopting digital assets and we're moving towards, a digital economy," without getting rid of the control and the greed. With that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on. If you guys want more free content, you guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. It's always up to you all. Have a beautiful day or a beautiful night, wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.